Guys, I've been muted for a long time, so I guess you didn't hear anything I just said. Um, I don't know what to do right now. Should I keep going? Yeah, I'll keep going because I'll just timestamp it if you when I post it. What the heck was I saying? It was pretty good. Um, yes, I was talking about um, you don't want to be buying the dip that keeps on dipping in a bear market, right? Buy the dip only works in a bull market, right? That's when you buy the dip. But in a bear market, you have to memorize sell the rally, sell the rally. So even if you're not shorting the market like I am, you're not going all in on every single dip or buying a breakout and expecting a rally continuation pattern. Now, are we low enough? Is this the low? Are we in a balance now? Should we take a look at this now? Arguably, the bear flag poll could potentially has played out, and now we're in this double bottom pattern. Zooming in here, and I'll have to zoom in here because I don't have my blue light glasses to help me see better. Right, we do have a short-term, week-long balance breakout pattern, which I did say via dog leash principle on your daily call had good odds to come and test the 20 moving average. The 20 moving average has been very relevant since late May and pretty much throughout the bear market, not even on this time frame, but especially on the weekly as holding. I mean, it helped me call this failed rally here, right? When we had the topping tail that closed back around underneath it or around it, that was another one. And now we're going back into it again. Now we're going back into it again on, it's seemingly strength underneath. We have about 107%. So it's above average for this time of day, but not incredibly so. It is not off the hook reversal level exhaustion. We haven't had some major buying tail. I don't see a washout candle. Like I said, I don't see a lot of evidence that this is the final low. We could have some type of counter trend rally that could start here, but then I think it'll reverse and we'll have to go and test the 300 moving average as we've done in the past. Keep in mind, every single bear market that we've had here has contracted a lot more than I'm sorry, he's had bear markets that have fallen a lot more than we've had. We're talking 70, 80% retracements from the all-time highs, and we're around 50. So, to say that this is the low and we're at 50, even if you have a contracted thesis market, I think is a little premature. I mean, let's just say we get high 60, low 70s, that hits that trend line that I've been talking about on the weekly of around 40 to 35,000, 38 to 36,000, 37,000. Now, our short setups for the last week have been all winners on the day time frame, except this last one. Winner, 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 winner. You keep your winners bigger than your losers. You will make money. But yes, like I said, I warned everybody, and I should have took my own advice that at this moment in time, I didn't want to open a position deep down because probabilities were so balanced because we had everybody and their mother has seen the move down, and we're near this bottom building thing. But at the same time, we're in this bear market where the larger time frame buys can be bearish again. So I didn't want to short it. I didn't really want to go long. The long ended up being the better move on this key reference area. I mean, once you saw the buying tail and then a pullback, you have at least, just back testing some moves that I missed for whatever reason. You had a nice indecision point. Anything past here for a stop loss is within our risk model, and that was a strong move. That was an important key reference zone. If we go back in time to the 4-hour chart, right, you will see that. Hmm, maybe the daily will show it. Yeah, I mean, this double bottom had obviously this buying tail. It had the trend line from touching from here to here. It technically needs three, and we got the third one. I could draw other types of fractal trend lines within here. So, yeah, I mean, there was some evidence that this was going to be a pause point for the bulls, but I don't think it's the final pause point. I mean, for one, we have a very strong, way stronger than this one. And let's look what happened when that one happened, right? Well, next day down, next day down, next day down, next day down. I mean, the CCI is incredible, guys. No one's using this but us. Don't take what we teach you here and put it into AI like some folks have had that are former students of mine that are making me nervous right now. They're trying to, you know what I mean, take our jobs. Don't do that. You know what I mean? We've discovered how to use this and use it right. This is likely to reverse. Now, one of the mistakes I made is that I kind of saw this intraday before the close and kind of shorted against the momentum. Okay. And when you short against intraday, I mean, in hindsight, if I look what I did on the lower time frames, I was like, man, did I really short against the trend day? And I kind of like, let's take a look at that because we're always trying to get better here. All my signals, if anyone's, well, I don't know if I'll make this one live or not, but every single, maybe I'll make this one live if I could get another student since everyone's quitting in the bear market. These were all live signals that I gave. You know what I mean? And this was one that I gave too that was the only loss. That's a pretty good hit rate. We go back in time for the last couple of weeks. Um, Part of me was like, well, this is sort of a W pattern and it broke out into it. So it was very aggressive. You know what I mean? It was an aggressive. I basically faded against sustained momentum and intraday bias at that moment in time because of the way it got there. So that was a little bit extreme. It was also earlier in the day. It was 10:45 where we could just go sideways and have another leg up, and that's what we did. So I was like, oh, I should have just stayed out. That was sort of a mistake. This was a high volume node. Yeah, we moved away from it, but we didn't really move significantly away from it where it could be a zone again. We're still just kind of oscillating around it. That was a mistake I made in reading the market. That's why I don't have a zone there yet. But it can launch a trend from it because it's mature enough for about a week or so, right? So 3 to 4 days to a week, it can launch something out of it. But keep in mind, we have gone a decent amount of move, with some pullback here, now straight line into it. And now we're sort of at the top of a balance here. Whereas, like I told you guys the other day, sellers are likely to be active, but just in my own body, after taking that loss, I wasn't super excited. I'm like, oh, I don't want to trade now, just from the human being at the end of it. But if I didn't take this short and then faded the back of that zone, let's just get rid of that. You see how I say that the back of when I fade key reference zones on non-trending days and get on board the trend on a trend day, you could say to yourself, well, we had a trend day yesterday and we did kind of trend up into it, but is it likely to have trend continuation when I know the sustained momentum is likely to have 2 consecutive trend days, especially into a zone? And based on my zones, the back of the zone holds, and you could have a stop up here, and you could already be taking half off right now if you wanted to. I agree. That's my system. If someone knows how to program it into AI, don't take my system that I just told you right now because the human side of it might be a little bit harder to exit. Like this came up here, it wasn't quite at my zone, which would have allowed me to I had a chance to kind of get out a little bit, stopped out, and then just kind of letting it cool off. But they trend days have 90% of the time will close in the last few hours of the day at the high of the day in the case of an uptrend, right? Or the low of the day in the case of a downtrend. So we kind of knew that once this broke above here, I mean, it wasn't the worst trade. There was this trend line that we were kind of testing, but the momentum, right? And off the zone. At this point in time, like I said, my initial reaction was right. Plus, the hourly did have a divergence, but it wasn't really developed yet. And it kind of caught up with itself if we go on the hourly at this point. I mean, at this point in time, if you faded this, there's a much stronger divergence because it's at least spanning 2 days. They work better on the 4 hour hit, and we don't have one really. I mean, we've made a higher high, and so has the MACD, and so it's not really showing on the 4 hour, but the hourly for sure. And we don't have to catch every move. I mean, it looks like, oh, I can't wait to short that. There is still sustained momentum against you, but you have prior momentum against you. You see how it balances it out based on the daily call? Here, the trend was against you and the prior momentum was action reaction against you. Here, you had a trend day, so it's more likely to consolidate. So you only have sustained momentum, but not prior momentum on your side. You guys will get it eventually. And I'm saying like sometimes the execution of it, when I'm already dealing with, emotionally right now, I'm violating some rules because I'm going through 2 different legal things. issues, lawsuits, and whatnot. So I shouldn't be trading or doing anything like that. I'm very stressed out, under attack and whatnot. So I have to be careful that I'm not, getting too excited uh, about what's happening or trying to, seeing if I can apply the system because the human being might be in an altered state here. So let's just draw a short-term trend line here, and we'll draw a one here. So this is kind of like a megaphone pattern. Yeah, it is. It is kind of a megaphone pattern. I still think we still could be expanding the range based on the trade location, the fact that we're in a bear, we went straight line up, but this is the same size down, right? Now on the daily, right, you're on a double bottom, so you might say could break out. It certainly could, but until I see evidence that we break this moving average to really go up here and test the 50, we have a very strong inverse zero line reject. I don't see that happening. This is usually calling the market very well, so I would be shocked that we don't have some type of if we get a strong topping tail like we did here and it kind of closes below the trend line again or anywhere kind of near this. And because we had a selling tail yesterday here close. We didn't. So if we go yesterday and try to imagine what today is, I mean, you can't say we had a bullish engulfing candlestick pattern because we didn't necessarily enclose the data from yesterday. We did, however, close in the green, so it is a bullish candlestick pattern. It does have somewhat of a selling tail, but it has a green body, so you could call it a piercing pattern. Not an engulfing pattern, but so it's not quite as strong. It's not like you would give it away to times two. You would mark it in a bullish category, but it's not, or even neutral bullish, but you wouldn't give it like a huge weight. You know what I mean? Like you would if there was like a reversal candlestick pattern here. That you get times two for a sideways up category the next day. You have to think of these dynamically in terms of, you know, whether it's bullish, bearish, or neutral, you know what I mean? Sideways up, sideways down, or sideways type of a thing. And then you can put variances on whether you think it's a trend on with my trend stuff that I've added to this. Then you can mark it up or down. But remember that you can amplify the categories with weights. So like if something stands out, it gets a weighted times two or even maybe a times three. Okay. So this candlestick pattern, it was nothing crazy special because it didn't. Now, if we closed above here and it already was a breakout and we took out all this data, that would get a higher candlestick pattern weight. That would be an engulfing pattern, a trend line breakout. Then the bigger picture pattern would get bullish. As it stands, it wasn't anything last night. It was all neutral for the patterns and whatnot. It is now. You did have volatility contraction, which is a precursor to a trend, and we get a mature balance on this time frame. 1, 2, 3, 4, 5, 6. That's about the last week. It's intermediate time frame. Then we get the balanced breakout. And as it's breaking out, I said back off short side. It's going to come up here where sellers are likely to be active. Doesn't mean we have to step in front of this momentum. I'm learning from yesterday, although this would have worked out for a little bit for a scalp, but that's okay. We don't need to if we can just distance ourselves from the last episode as a coin flip would from the next one, then we could say, okay, I'm going to really find the really good odd setup. Let's see how today closes. Let's see if we close underneath this candlestick pattern with a topping tail. Then we could be sideways down tomorrow, right? Because I'm not ignoring this inverse zero line reject. I'm not ignoring the fact that we have this head and shoulders pattern, right? I want to see evidence that we're going to come up here, and I still think that even if we do, there's going to be another leg down. This pattern to me looks like a head and shoulders pattern. It doesn't look like a washout candle where Bitcoin's volume really ticks up, and then we have that last, you know, washout candle to mark the end of the bear. We can maybe see this a little bit better on the weekly. Let's take a look. Now, one thing that maybe was giving us a heads up that we'd have at the start of, like, granted, it's not. This isn't the close. It's Thursday. This is not the close. Was this bullish divergence on the CCI. Now, if I had to rank my tools, the CCI, the stochastic RSI, and the stochastic divergence, this one would be on the shortest time frame, middle time frame, and then this is the longest time frame. similar time frames, but this is more like week to week. And if it's on the daily, it's day to day. So this was sort of, as we were coming down into the same level, we weren't super overextended for, in my opinion, a bigger rally, but some type of a pause. Now, I still think this is more of a risk for a failure and then a move down into the 300 action reaction beauty principle like last time. If we just take a look at what happened in 22, kind of trade, once we tested the 200, we broke down into it. And keep in mind, this went from around, 61 something to 22. That's more than half. And we've gone half into it. So this went, even more potentially exhausted, but still broke it. So, if the patterns repeat, right now we are technically, guys, right? The last candlestick, we closed below the 200. And I think that's significant because I imagine that we would come back up and back test the 200 now, and it could act as resistance. So this could, I'm actually going to post this in the channel real quick. Just bear with me for a minute. I'll fix the grammar on it later. Just wanted to get that out of it. So, right, and we're already, and it coincides, like I said, with the 20 on the daily. Let's look how this might look for the Gaussian channel and the time cycle. Let's go to the Gaussian. Education. Okay. We have this green chart. Sorry, the green moving average. We have the 200 and the 300. You see how they work kind of as this sideways channel? We need to get it in the golden pocket. It was a significant move between 22 and 15, right? We got up as high as maybe 25 and then as low as maybe 15. So, that is almost a 50% move. So that's what potential, and maybe a 68% drop from this high down. We are not, in my opinion, done yet. We have a head and shoulders pattern here. And, this bear market took a while for it to be, the confirmed. And then we were in the golden uh, reversal zone, or what do you call the golden pocket with the golden cross, rather. This is a weekly chart. This red Gaussian bear market indicator for confirmation is still, in my opinion, immature. I mean, the data is only from here to here. This one lasted all the way to here. I still think we're early. I think it's going to be fourth quarter that we get a final Bitcoin bottom where I think it could start if we can get an extreme crash down into the 300. Maybe get a counter trend rally, then it has one more mega failure with a washout candle. The ultimate low could happen, maybe in the summer, and then it goes sideways kind of a thing. But, buying up here versus down into this golden pocket is a big difference. So we also got to be careful that we're clear headed and we're not going to miss the opportunity by waiting for the low that never manifests. So we don't want to be neither. I mean, the larger time frame bias is clearly bearish. But in my own personal bias, I don't want to be neither a bear nor a bull. Okay, I want to be in sync with what Bitcoin is doing. Okay, right now, from day to day potential, my bias is neutral. I'm not entirely sure. It could be because I lost the conviction to short again because of yesterday's loss. Obviously, this zone, it's more extended. This was in the middle of a trend day. This is in the odds that the trend day will be a sideways day because it's less odds to have two in a row. So you could have shorted a stronger zone. It's stronger than this zone that I shorted. So yeah, it could reverse. I don't have to catch everything. I still have a runner in if it goes lower. And I do want it to go lower because if it goes lower, then I will buy more. But if it doesn't, then we could potentially figure out ways to get on board if it violates the bear market thesis of a lower bottom at this point. I mean, I'm not saying I would wait for this because I'm going to put on a counter trend rally if I see certain indicators flip bullish. But technically, just if you want to be a pure technical analyst, right, it would literally need to break and hold with 2 weeks, not 1 week, not 1 day, 2-week candle closes above the last swing high. And we'll go to our charts. It's around 97, 98,000. because we've made multiple lower lows now in a confirmed bear market. But we don't trade on confirmation in this channel. We don't wait for confirmation on our entries. We don't trade on confirmation. We knew there was a bear market on the triple top when it was around 124,000. I even said the bearish, if there's a flash crash bearish engulfing candlestick pattern, then we have a V reversal, and then that would be a confirmation. And that was still in the 100 to 120 range where you could have got out. Then it broke that. Hell, oh my God. Everyone was calling for a pullback. People got really upset. It's pretty crazy how this, it's amazing how these things happen over and over again. But it's emotional. This is not an easy ride. Not an easy ride at all. So, like I said, this is an interesting indicator. Once it confirms a bear market, it won't even let you see a green candle. You can see the distance going up. Let's look at this from a different viewpoint. We'll get rid of this. We'll go here. Right. So this portended or indicated a future potential bounce. Doesn't mean this has to close. The close has not happened. Could be more of a sideways week, but it's a little green here, right? The above indicators are still bearish. I mean, like I showed you guys before, in the previous bear market for this indicator, just trust me, this thing can go sideways while we go down for quite a while. And we're not even going sideways in the the oversold quadrant yet. We're still orange over blue, which is indicating that the downtrend is on a larger time frame is bearishly intact from a momentum perspective. I talked about on the divergence indicator where I'm looking for major divergences in key trend line support and resistance. This bear market is what the indicator is giving. I'm simply noticing here a trend line that's acting as resistance. I kept talking about how this hit, this hit, this hit, and this hit. And if we came up here and this hit, right when I was shorted this and held runners down into the low 60, 61,000, 60,000 area, with the idea that maybe I should go all in, all out there. That would have been an absolute fortune of an idea if I could start trading like that. I will start doing those types of trades at major turning points because I envisioned it. I just did not have the cojones to do it. Next time I will. So boom, boom, boom. We came up. It did act, and we reversed sharply, confirming the short and the downtrend. That acted as resistance. So these two are confirming bear market. This is showing this bullish divergence or anything. But what it's not showing is some type of a washout, right? Because this is not really a good, we're basically coming up here and we are back testing a multi-year trend line, guys. This held as a trend in the 2019 move before the next bear, right? Then we had that anomaly. We retested it again for COVID. Or no, we're looking at this one. I don't think we're even at that one yet. Yeah. Right. I don't want to, this is the other one that I'm using the bottom. I'm using the body of COVID here and this one here, right? So touching body COVID, this is the wick of COVID. So I could touch this touch point and this touch point and this touch point that we broke, right? Now, in my opinion, we have already come up here and sort of back tested that. That was part of the short idea that we had. And now we've come down into it, into this double bottom. Eventually, once this plays out, I think we are going to get another move down into this area here between, let's just say, mid 50,000, 55,000 down to potentially a wick into the low 49, 48 area. Basically, it needs to probe and penetrate the 300 moving average for me to be convinced that we're going to get, and also, right, trend line, then we can get a bounce up into here. Now that would be worth a portfolio reload. Like I need to see a good risk reward ratio because if I just give a signal here and it crashes down here into the 300, my risk, there's a lot of liquidity in that zone, right? So that to me, I want the best opportunities. And I'm not saying there wasn't an opportunity here to go long. There possibly was because of the zero line reject short term. It's just that for me to go long on size, I need to have a real good opportunity. And I want the liquidity of this 300 and this trend line, right, to be in my favor with action, reaction, bottom building, and then the reward potential to go back up and test this trend line for then a final breakdown where we touch this trend line I don't have it drawn here, but it's basically like, the 37 mid 30,000 area could be the final lows. Now, I'm just monitoring this because I'm open to changing my bias if certain things flip. Um, I want to see how we close. Obviously, today's important. We're already seeing, some topping here. But look at this pullback continuation because it's been overall a pretty bullish intraday bias type of a day, over 2%, right? Because here is the open, kind of pulled back, pull up, higher high, higher low, higher high. So still, I didn't give a signal to go short here because I want to learn from my mistakes. This was yesterday going up into it. Why short that? That didn't work when we did that. So we're not going to short again to trend it, even though this day has better odds. Let's see if we get a balanced day, right? Then if we come up here and we start range building up here, we see some bearish divergences against sideways price action, not trend up price action. And maybe there's a short. Um, but yeah, I mean, this was obviously a decent long because you had the potential of a wide double bottom here and a clear invalidation point, right? Back of the zone, best odds of holding. But look, that double bottom, you get that intraday double bottom price confirmation and that buying tail. I saw that real time. That was tough for me to let that one go. It's like I said, it's been a little bit of a personal challenge to flip bullish, even if it's like temporarily for like 1 to 3 days, which makes sense. I understand we have to go into the series of thrusts and corrections. But what I've been really rehearsing in my mind's eye is the setup that might occur if, notice I said if we get to that 300 moving average and start bottom building at it. That's when I would feel more confident to start going long in both the day trading and the portfolio reload positions. As of now, like I said, I showed you why the RR ratios are a little bit kind of a hanging man there on the daily. It makes me a little bit nervous right now. I know it looks good right now on this time frame, but until we even break this key swing high, guys, we are still in a pattern. And what is that pattern? It is a balance. In my opinion, as long as we close below this key swing high, we are still in a balance. Because what this mature balance could have done is we started to oscillate around the high volume node, and the longer we do that with some volatility contraction, which we did have here and here, tested the bottom of it, then we get a trend. Now remember, since the markets are fractal in nature, you can have trends within balances. The question is this a really unique balance breakout pattern? Like I said, that a very prominent inverse zero line reject on the CCI on the daily is one strong argument against the sustainable momentum of that idea. And the fact that is if we don't close above this swing high by the end of the day, that increases the probabilities that we are going to have a false breakout. And that false breakout, then if it closes at the end of the day, like at least like this below here, or even better, lower, then it increases the odds that at the very least we can start going short again tomorrow and hold for the lows of the balance here for a tradable reaction. Okay. Because when you have false breakouts on balances and it becomes a false breakout pattern instead of a breakout pattern, then it usually, at the very least, could then even go test the lows of balance. Now, let's just look at this from a time cycle perspective. This chart hasn't failed us yet. Doesn't mean it's infallible, but it's just a fact. There we go. You see how we haven't really, I could make this a little, we haven't had that crazy wick down. I'll put it on the original for now. Because it's at least touching here, 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 here. There's a couple here, right? So triple divergence here. That's very bullish, but bearish, bearish. And what I really wanted to show you was this time cycle here. So the real inflection from a market phase shift should be around here. Now, it could be that the lows happen sooner, maybe this summer. And then this starts to be the balance kind of goes in here, forms like a head and shoulders or something, and then it starts to break out around this. This is December 7th. This time cycle chart has not failed us yet, so that could be so it doesn't mean we can't reload sooner, but then this is when it should be obvious. You see how this worked really nice? That gave me more confidence to short, because if I was right, we were going to have a big move down into it. And that's what we've had. So we just be aware of that. We could draw a trend from here to here, guys. This is how you draw trend lines. We're looking at trend lines from multiple time frames. Here, that would be a cross trend. We want to see how this behaves. We want to see how this closes. We're going to see how it closes tonight, because we're looking for opportunities on the day time frame, the swing time frame, the weekly time frame, and for the portfolio. Multiple opportunities to short here if you had the conviction to. It would have been correct process to short. You have great trade location. You have a bearish larger time frame bias at that point in time. You had on the daily, you had the moving average as resistance and the inverse yield line reject, which had 2 days to mature since yesterday. Much better trade location than when I shorted the trend line here, because now you have this. I kind of envisioned that if this failed, then it would get to here, but I would be too kind of messed up to short the sucker, but that's okay. I think due to the strength of today with a bullish intraday bias, remember, guys, that's who's in control of the day. That clearly stands against your short. When you're deciding whether to go long or short, if you see a setup, calm down, take a breath. Most of the time, when you want to get in, you'll definitely get better trade location if you're just more patient, because most of the setups that we're taking are based on trade location, and that's our main source of edge. It's not based on our momentum setups. I'm not recommending. We have taken some momentum setups, like a pullback continuation pattern if it's an obvious pure downtrend day. But remember, we have a list of pre-market factors that increase the probabilities for a trend day. So we're already scanning for that ahead of time, and we're not reacting to price, because we're not going to get faked out and just follow price on a day when it's just a volatile sideways day. Okay. And that's what potentially could be today. It could be a volatile sideways day. I don't know. The intraday bias is up. The momentum is up, but the prior momentum is because it was up. Today has less odds to also be up for that category. It has better odds to be sideways or even down. Action, reaction, power, momentum. You're also and also, like I said, this resistance zone is not as strong as this one. Big zones create big moves. We had a big move down, so that could potentially produce a big move down. I don't recommend shorting right now, because you're still against what I said is against with the intraday bias. The other markets are pretty green right now. You want for a risk averse idea, you don't want to wait till today's close. That was my idea yesterday, and that idea would have made me money by preventing myself from losing. But I chose to override it when I saw a smaller time frame selling tail on a candlestick pattern. So you just have to be aware. You got to stick to the original plan and maybe step away from the screen. So, yeah, not really recommending. On the hourly, you have a zero line reject, which says the bulls might be just continuing the trend. It might just close sideways now. Like I said, the main setup for today is going to be whether on the daily we get a close, how this candlestick closes. It's still 50-50 if it closes like today, because we haven't, obviously, if it breaks the 20, game on, we have a short squeeze, okay? If we get a stronger selling tail, right, the stronger the selling tail, the greater the odds this becomes a false trend line breakout. In fact, we may be able to redo this right now. And if we just did it from here to here, so let's see how this looks. Not really hitting that, but it's hitting there. It's just a possibility. I'm not, may need to redraw it, but how I'm drawing this definitely predicted the squeeze here. We had this also helping us for a horizontal squeeze and a directional squeeze. You had a balance breakout and a potential trend line breakout. But remember, this trend line breakout is still a falling head and shoulders pattern if we cannot close above this 20 moving average. I don't think we are going to. That's what I'm saying the probabilities are. I'm not saying it's enough for me to get short right now, especially after I lost yesterday. I have some short runners up here and here that I'm still holding. I don't want to give back all my profits and start trading short at the bottom of the lower range when I told all my students not to. But I'd be lying to myself if I said, hey, this isn't a really strong inverse zero line reject here. I would be surprised if we get a more of a predominant selling tail. If we come back into here, this could be a false breakout pattern, a topping tail like this, and then we can get a leg and puke our guts right out of this sucker down into here. I'm going to start going bullish again here. That's when I think that the larger time frame bias would then become bearish to neutral. It's a stronger zone. I expect more volume to come into the market there and get a bigger reaction. That's just what I'm envisioning. Doesn't mean it has to happen, but I need to see evidence otherwise. This very strong pattern here gets a weight times 2 in my mind, maybe even times 3. The fact that it's underneath this very important 20 moving average, which let me take a look at that on the weekly real quick. Yeah, I mean, the 20 moving average has been very important for this bear market, even on the weekly. I don't think we'll get up to the 69 area, but it's certainly, we'd have to see this evidence of it. Like I said, to do that, we closed last week significantly below the 200, and now we're coming back up into it with a slight reaction down. I think this could act as resistance again. It's a possibility. Throwing it out there. I'm bearishly biased as well, so I'm going to be working on the categories of how do I feel about being short, how do I feel about being long. Carl Jung says that once you bring something into the light, it no longer remains unconscious. So, how do I feel about being long overall? Not good right now. I've been in a bear market for 6 months. I feel way more comfortable shorting the market, as I should. There's been more shorting opportunities, but I don't want to lead that bias to a situation where I'm not going to be pulling the trigger at the right time for everybody. Okay. At the same time, I got to be honest and I got to be courageous to say I don't see enough evidence of a bottom yet to give a full reload signal. If you're really nervous and you want to start DCing in, it wouldn't be the worst time to do it. So go for it. But I just don't see evidence of a final bottom yet. I think that's going to come in the fourth quarter, but the ultimate low could come this month or sooner. I just need to see some type of um, you see how these were these washout candles, last time, something, right, where we get just that ultimate. It's almost like I'm giving the signal here where it's just bottom building without that action reaction. And even still, we got another one down. But I would rather give it here than risk not giving it if we don't get something like this. But it would be doing it here. It's just I feel like if you'll see what I'm talking about on the monthly, where I think where we're at from a parallel perspective. It would be very premature right now to say that the bottom's in based on the facts in the chart. Okay. Let's just get this out of the way. I want to have a clear head when I look at this. But yeah, I mean, I drew that and here because I mean, bull market, a W pattern, whatever, reverse double top, break leg down. W pattern, reverse double top, break leg down. A little bit different structure because we didn't have this like hinge here, but there was this. There is this, and I feel like we're here, right? I feel like that if I had to guess where we're at, possible place, it could be something like this, right? Where we are here. It looks like we're making a double bottom into support. It looks like we're making a double bottom, like a micro double bottom here, even from a weekly perspective, but then having confluence here, sort of a micro double bottom here with confluence here. And notice that when we did that, oh, this is really interesting. If I put that arrow here, it's just temporarily. We don't need this right now. But I am going to use if we look here, look, it's just the start of the sideways and the oversold. But yet, look how much more it went down, like 50% more, guys. That's what I'm saying. Just because it goes into the oversold, guys, with these RSIs, they can go down 50% more and go sideways for a long time. Look, and look at where we were just starting to into that sideways phase. You know, if we look at the monthly here, so just be aware of that, and yeah, the red is back above the blue, and then it just starts to just they fake it, they just go over each other and go sideways while it goes down. Like red over blue is bearish, but it doesn't even matter if it's a little bit blue over red down there because it just goes they oscillate over each other. Then it has the violent breakdown out of this. That's where I'm saying it could get to like this 35,000 level where you see how it broke here, where we are here, pops back up. Maybe this is the bullish week, and then it pops back down into, and then we get like a 35,000 by in the middle to end of July. And then into the fourth quarter, it goes sideways, and then we have a bull market for 2027. And we're gonna go out, we're gonna go crazy on them bulls. We're gonna get it, guys. We're gonna get this. We are gonna get this. So that's the idea. Is not really to go all in right now, but this is kind of where we are, where we might be pulling back up into this to get one more leg down. Let's see how the monthly CCIs look. Yeah, it looks, see how it faked. Oh, we're in the hook from extremes, but then it has a whole thing. Nothing here says, oh my God, we're over something. There's not even a divergence here worth noting. So yeah, monthly, this is not a bullish looking chart. I might actually publish this. Um, okay, so when did I post this? 3:40. Okay, it's been a pretty good call. They don't always have to be hours and hours. It's not always time and the frequency of posts. It could be just really good quality posts at the right time, or there's been some good day trades in the channel. Hopefully, they've been educational. Yeah, I think this could be a really crazy inverse zero line reject here. I think we get some type of this, and then the next day we can short it, boys. Boom. And then it can puke guts right out of here. This is no joke. That's my final, what I think is going to be tomorrow. If it closes like this or worse, maybe sideways down. Okay, guys. So I'm going to stop the share here. At this moment in time, if there was anybody that joined the room, I know I kind of posted it impromptu, but it is 26 minutes past 4. I don't think anyone knows that I'm even posting this right now. So it is all right. But I'll just, like I said, I post this in the room for everybody. But at this moment in time, I would open the floor for call or questions, but we don't have anybody in. So we're going to call it a day, guys. Over now. Take care.